Let me say my own 7-7 for everybody. 7-7-7 for everybody. So good evening, everybody, and welcome to the phase 2 of this boot camp. And I promise tonight you are really gonna be going with so much value tonight, so much value tonight. So I think we have waited for enough people. We are getting into what the reason why we are here tonight right away. We are getting into the reason why we are here tonight right away. No need to waste time any longer. Anybody that is missing the class, we have to go and download the videos and watch all over again. And Francis, once again, kudos to you. You are doing a very nice job. You are doing a very nice job.
Thank you.
So what we are going to be looking at tonight is risk management and trading psychology. That's what we are going to be looking at tonight. And one thing I want us to always remember is, irrespective of your strategy, irrespective of your analysis and all, if you lack trading psychology, if you lack risk management, guys, you are going nowhere in Forex. So don't be the type that will be looking for that perfect strategy. Let me tell you guys, there is no 100% in Forex. If you are looking for 100%, then go and look for another business. Leave Forex. If you have a perfect strategy and you have a poor risk management and trading psychology, you are coming back to 0 points. You are coming back to 0 points. If you have if you have what's it called? If you lack risk management and trading psychology, and you have a perfect strategy, you are coming back to 0 point, because at one point in time or another, you are going to blow that account. And I believe everybody is on the channel, on the general channel. You saw somebody posted a loss of $7,000 today. That's the same friend of mine that lost. That's the same friend of mine that lost $84,000 within 1 hour.
Is that
That's for you to know. Yes, that's the way it trades. That's the way it trades. I'm not surprised. The day he told me he lost $84,000, I wasn't surprised. That's his mode of trading, and I think he's comfortable with that. you know, well, it's good, but when you are thinking about the long run, everybody can swing an account from 100 to, let's say, 500, 1,000. But the same way you swing it to the top, that's the same way you swing it to an empty account. It's always very easy, when you are swinging accounts, you are always happy. You are flipping your account. Rather, you are flipping your account. You are very happy. But the day you are going to blow it as well, yeah, you won't come out to tell anybody that you've blown your account. So tonight, like I said, we are going to be looking at risk management and trading psychology part 2. So let's get to it. Please, I believe everybody is with his or her notepad. If you have any question, just keep it to the end of the class. Let me just quickly run through what I have here tonight. So talking about trading psychology, the psychology of trading is often overlooked by so many traders. They don't see it as something very important. They think all they need to know is know how to do that analysis, get that indicator, get all that, and they don't give it more attention like they give to other things, because they think it's inconsequential. But it is one of the most important things you need to know. That's why we are laying more emphasis on it on this boot camp. That's why we are putting more emphasis on it, because of its importance. So it is not to be overlooked, because it forms a critical part of a professional trader skill set. If you are planning to take your game to the next level, it is so important that you can't do away with it. That's if you are planning to take your game to the next level. and which I believe one of the reasons why you join this boot camp is to take your game to the next level. So it's something you should focus on. It's something you should focus on. It is so important. You should focus on it. So trading psychology, what is trading psychology? Trading psychology actually includes all the emotions and feelings that a typical trader will encounter when trading. And what are the emotions and feelings we encounter when trading? Some of it are, we encounter fear, we encounter greed. You know, you encounter fear, maybe probably as a result of taking so many losses, and you even see a very good setup to enter it, you know, that thing is just doing you like, you are going to lose that trade again. So the fear is always there. Then greed too. Greed is something that everybody is caught on the web of greed. Almost everybody. Most people enter this market with the hope that with the hope of becoming the next Dangote of this world. We enter this market with the hope of, you know, going around and painting the town red. Fine, Forex will upgrade you to that level, but sometimes it takes time. It takes time. This is not another quick rich scheme. This is not another MMM. I know some of you did MMM then, that you know, you provided help, and before you know it, you get help, and you know, you are painting the town red. But when it comes to Forex, Forex is not another quick rich scheme like all those stuffs you have out there. It's not another. So don't approach it with the mindset of getting rich in a single day. Don't approach it with that kind of mindset. So some of the emotions we encounter and feelings we encounter during trading, like I was saying, we encounter fear, greed, nervousness, anxiety, overconfidence. And there is one I tag FOMO. Yeah, that's fear of missing out. The fear of missing out. Maybe probably you open the Telegram channel and you realized a trade has been called like 5-10 minutes before you opened it, and the trade has even left the entry point. You saw the entry point and you realize the trade has left, but for the fact that you don't want to miss out of the trade, you took the trade without minding market structure. Maybe the market has just broken structure and is going, and very soon it will be going back to create a lower high. Then before it's going to continue the movement in that direction, then you jump into the market and the market start reversing on you, and you couldn't even wait to accommodate the loss, and before you know it, you are stopped out and the market continues, you know, to go your direction. So fear of missing out. We are always afraid that it's always doing us as if when we miss a trade, that's going to be the end. Guys, I will always tell you this. It is not a must for you to trade every day. It is not a must. Nobody is mandating you to trade every day. If you are putting yourself under the thought of it is a must for you, then I understand you have a trading plan you work with, but if you are not seeing your setup, if you're maybe for any reason missed your entry, then relax. Like I will always tell you, this market is not meant, if you rush at this market will rush you out. Take your time to, you know, get your entries, your confirmation checklist and all before you get into this market. So don't always let the fear of missing out, FOMO, don't let it play on you like every time. If you miss a trade, you miss a trade. Have this mindset that there is thousands of setups after that one that you missed. That's how to think like a professional. There are thousands of setups after the one you missed. Don't always let it be like that's the end of life if you miss that setup. So another one is doubt. You see a setup, you've done your markup, but you are doubting yourself to take the trade. Then probably after the trade has now moved in your biased direction, you now be like, you saw the setup, you've even seen it before people, you saw it maybe during the night, and now you refuse to take it and the trade has already gone your way. So these are the emotions, some of the emotions that played out on us during during trading. And when you let all this start playing out, okay, so Ngozi said it happens to her often. Yes. When you let all this play out every now and then, sometimes, it affects your judgment of the market. It affects your trading in general. So we should try and avoid anything that will bring about emotions in the market. We should try and avoid it, because by the time some of this start playing on horse and that's when you see yourself closing a trade prematurely, and every other stuff will start coming in. So we are moving to the next thing. Some of what should I call it, trading mistakes that we make in our trading journey. There are some common trading mistakes that we make in our trading journey, and the number one I'll be talking about is trading without a plan. This you cannot underestimate a plan. There is this saying that if you plan to fail, if you fail to plan, then you are planning to fail. That's just it. It applies in Forex. If you fail to plan, then you are planning to fail. It's automatic. If you see somebody that like, you can't just go out of your house in the morning without having a predetermined place that you want to go for that day. It is not when you get into the public bus that you now start thinking, oh, I want to see Francis today. After seeing Francis, I want to see Ngozi. After seeing Ngozi, I want to see Spo. No, it doesn't happen that way. Before you are going to step out of your house, you would have had a predetermined, plan before you set out, and that will inform what you are going to wear, whether you are wearing, a very bogus cloth, or you just want to be modest and all. It will inform all that. So the same thing applies to trading. Before you pick your first trade, know your target, know your target for the day in terms of profits. Know the limit of your loss for the day, that if at this point I've encountered $1,000 loss for today, I think I have to go and rest and approach the market again tomorrow. Because if you take more than the loss you can bear for a day, that's where emotions start playing out on you. That's where emotion will start playing out on you. I could remember the very night I was just like my trading room and my trading, I was sitting just in front of my laptop like this, and I lost $2,000 in a single night. I lost $2,000. The something actually, it got to me. I just closed my laptop for that night. I went to sleep, and I approached the market again the next day. I approached the market against the next day, because the loss actually got to me, that $2,000 in a single sitting. And before the end of that week, I was able to recover it. That's how to do things. That's how to do things. Not that you now sit there as if you have a connection to the Bank of America and you must recover the money tonight. You must have a limit, a loss limit for the day. Because like I said, if the loss is more than what you can accommodate, it will start playing on your emotions. Your judgment will no longer be right. It will no longer be right. So one of the mistakes we do in trading is trading without a plan. Trading without a plan. And thank God, everybody in this boot camp now have a trading plan. Whether you now make use of it or not, that one is left to you. But I recommend we refer to it and make use of that trading plan. Please make use of that trading plan. Make use of it. So the next point we are going to be looking at here is not setting a stop loss. Not setting a stop loss. Approaching your approaching your trade without a stop loss. Please don't let it be something that will be part of us after this boot camp. Even before the end of this boot camp, if you have been doing it, trading without a stop loss, you have to put an end to it. Because when you are doing that, like I said, you are going to be enjoying it, but the day it will backfire. Maybe you just enter the trade and probably your village people are after you that day, and network will decide to run away. And by the time you get the network back, the account would have been emptied. So guys, you must define, like I said, define your loss on every trade. On every trade, you must have a defined loss. You must have a defined loss. Don't let loss always catch you by surprise. When a loss catches you by surprise, that's when you now see people becoming angry after they hit stop loss. Have a defined loss. And if you know the stop loss on a trade is more than what your account can accommodate, or more than what you planned for the day, then just let the trade, let it go. It's not a must for you to take every trade. I was showing Francis yesterday a particular stop loss on volatility 75 that was dropped in a particular group. Guys, if I drop that kind of stop loss on my channel, I believe so many people will exit that channel that very day. So many people will exit. You need to see stop loss. And now I was now imagining that this is the same trade we enter, because they enter the sell to, I enter the sell to, but you need to see their stop loss. In fact, even if all the banks in America want to manipulate the market, I don't think that stop loss will take the hit. So the stop loss was so far. If you hit that kind of stop loss once, your account will be empty, irrespective of, even if you use the lowest lot size. You know, you should have a defined stop loss for the day. Don't use as we have arm rubber lot size. I think there are some stop loss too that are arm rubber stop losses. Please, let's have a defined. Like if you are, although when I was coming up, I made all those kind of mistakes. I was part of the group, and when the guy drops a trade, I will just take it. Before I know it, on account of, let's say, $50, I will start seeing -10, -20 on the list lot size. Before I now talk to myself. So in the process of trying to, work on your emotions, you still need to work. You need to work on yourself as well. You need to work on yourself. Nobody is forcing your hand to pick that trade. Nobody is forcing your hand to pick that trade. When you have the reason not to be sure of that trade, even if I'm the one that dropped the trade, leave it, and just let it go. So the next point here is what is revenge trading? You enter a trade, you hit stop loss. Instead of you to refer back to your chart and do proper setup to quickly recoup the money you lost without adequately checking the chart for a proper setup, just because you took a buy, for one reason market was selling, and it took out your stop loss, and immediately you click on sell again without checking whether the market actually wants to sell. We do it a lot. We do it a lot. And most of the people that engages in that are people that like to edge the market. I'm not going to mention name, but I know there is somebody in this particular boot camp right now that edges the market. You are buying, you see that the market is selling at the same time you clicked on sell at the same time. You clicked on sell. So you have an open position for buying and selling at the same time. You want to turn yourself to Bank of America. Please, there are some attitudes we are not supposed to constitute in this journey of becoming a professional trader. We should learn to accept our loss. Whenever it happens, learn to accept your loss. We shouldn't be looking for a way of, taking a revenge trade. Definitely, if you lose any amount, with the right risk management, at the end of the day, you are going to gain the amount back. But don't always be in a hurry. Don't always be in a hurry to, you took a loss now, immediately you want to recoup it. All these things are one of the stuff that piled up, and at the end of the day, play on your emotions. It is going to play on our emotions. Then another point here is letting losses run. You took a trade, maybe by the time you are taking it, for one reason or the other, you missed, you did not check your setup very well. Then along the line, maybe you didn't realize a structure has been broken. But along the line, you now realize that, no, this market, assuming you took a buy, you now realize that this market is actually going to sell. In that kind of situation, you don't have to keep on holding such trade and let your loss be getting bigger and bigger and bigger. In such situation, just close out the trade. Just like one guy that used to make a post on the general channel, it is only whenever he is losing a big amount of money, that's when you see him come and make a post. Maybe out of $6,000, it would have been on minus $5,000 plus. That's when you now see him come and post on the general group. It shouldn't be like that. By the time you realize this trade is not going to go, it won't go your way, just accept your loss, close it. Then you have money to go into the next trade. Like there was a guy that did that too on, I think that was on Sunday. I dropped the trade on V75 1S. I've even taken profits. Then I saw a private chatted me later that should he still hold this trade? In fact, I was surprised that we trade again. I've taken profit. Okay. I was now asking him which trade. He said V75 1S. Okay. So I was trying to, check up the analysis and or whether it was still going to sell. And I saw that this thing is still going to sell. But as at that time, I told him, see, I asked him the capital it was having on him. He said $60. Then I asked him, what is your target for the day on $60? I think he said $25. I was like, $25 on 60, you are aiming at $25 on an account of $60. That alone is enough pressure on that account. That alone is enough pressure on account of $60. So I was like, you're aiming at $25 on account of $60. How many percent is that? So, but it was hoping the trade was still going to go his way until he eventually lost. No, he was asking me what should he do. So I told him, for me, I'm going to close, because he used abnormal lot size at the same time. I told him, for me, I'll close the trade, and the money that is left, I think by that time it was still having $45 left. That the money, at least with $45 left, you still have opportunity of taking more trades. But he left it until the money was remaining $19. the money was remaining $19 before I closed it. So we don't have to when you realize a trade won't go your way, or maybe probably you've done it. Although that very day, V75-1S eventually sold. V75, but because of the massive lot size he made use of, his account couldn't accommodate it. It was getting to a stage that he himself was realizing that maybe if he didn't cut short the loss, the account will become empty. So it came out with $19 out of $60. It came out with $19. So immediately you realize a trade won't go your way. You don't need to keep open. You don't need to start fasting and start climbing the mountain to pray for the trade to turn your direction. You don't need all that. There are so many things you can pray about for the trade to come back to your direction. Just accept your loss and wait for the next trade. So another point I'll be talking about now is having unrealistic plans and expectations. Having unrealistic plans and expectations. What is unrealistic plan? You have an account of $20 and you set a target of making $100 profit on a daily basis. That's very, very unrealistic. Too unrealistic. There was a time a guy approached me. He said he wanted me to manage an account for he wanted me to manage an account for him. And he said on the account, we should be targeting $1,000 like on a weekly basis so that we have enough to share. So immediately I had $1,000. I was like, what's the account you want me to manage? What's the level of that account? He said $700. So on account of $700, you want us to be targeting a profit of $1,000 per week. I told him this is very, very unrealistic, and I'm not going to be the one to take such account, because it's not that I cannot approach the market and try to flip an account on a weekly basis. I can flip an account, but if you want me to do that, then we are going to reach another agreement that both of us are going to sign, that for any reason, if I'm going to aim at $1,000 like on a weekly basis, your account too can blow along the line. You have to sign, and I will sign as well, that you are giving me the go ahead to, in case this account become blown. Because you just imagine, that means with $700, we have 4 weeks in a month. With $700, is aiming at making a profit of $4,000 minimum, like every month, on an account of $700. Eventually, I told him that, see, I don't manage accounts like this. I don't do account management like this. That what is aiming at is so unrealistic for me. I have a trading plan I follow, and for me to handle an account, that's what I'm going to follow strictly. Even when I'm managing an account now, if I'm supposed to use 0.02, if you are giving me account initially, use the lot size to either 0.01 or 0.005 initially, so that by the time I have what's it called? By the time I have profit, then I can now move to the normal lot size I'm supposed to use. Because I don't like, if I'm managing account and you are having drawdown on your capital, I don't like it. But you see, people, not everybody will stick to that. So having unrealistic plans is actually the enemy of traders, because with a grid setting, what you have not achieved in 5 years, you want to achieve it in a single day, because there is enough liquidity in Forex, and you are coming with the mindset maybe because we live in Africa, everything will just be attracting us. We need to change the mindset. Becoming a professional trader entails, a revamp of our mindset, which I believe this boot camp will actually do for everybody. This boot camp will actually do that for us. So there are so many trading mistakes, but I just pinpoint the one I feel is so important. So probably on your own, you can go to babypips.com, read more, do your research online for trading mistakes, for other trading mistakes apart from the one I mentioned. So now we are going to be looking at risk management. Risk management. That's what we are going to be looking at now. Risk management is being able to define your target and your stop loss upfront. Being able to define your target and your stop loss upfront allows traders to breathe a sigh of relief because they understand how much they are willing to risk in the pursuit of reaching their target. You don't always let, like I will always tell you, don't let what's it called, your stop loss, the amount you are putting in your stop loss, don't let it always catch you by surprise. The other time we were talking about how to calculate your risk whenever you are taking a trade, both on currency and both on volatility. So please, if you have to go and watch that video over and over again, please go and watch it. At least before you enter any trade, you have an idea of what you are committing into that trade. You have an idea of it. So being able to define your target and your stop loss upfront allows the trader to breathe a sigh of relief because they understand how much they are willing to risk in the pursuit of reaching their target. They understand how much they are willing to risk. Not that it will catch you by surprise. No, it shouldn't be like that. Risk management is very key. Is very key. And I will always tell you, any trade that I'm taking, I don't take a trade that will give me a risk to reward of ratio 1:1. If you drop it for me, if I don't take it, even ratio 1:2, I will think very well before I will take a trade that will give me ratio 1:2. It's a personal decision for me. It's a personal decision. At least before I enter any trade, it has the potential of giving me 3 times of whatever I'm risking, such that if I am risking $50, the trade has the potential of giving me $150 minimum. Minimum. If I am risking $2, the trade must have a potential of giving me $6 minimum in profit. Not that I will risk. You see some people, the stop loss will cost them $50 and they take profit. Even the take profit too will be that they are aiming at will only has a potential of giving them $20. Guys, that's a very bad risk management. That's a very bad one. I don't engage in all that. I don't engage in all that. Please do not do mistake. Do not do mistake of taking such trades. If a trade cannot give you up to even at the least 2 times of what you are risking, do not take such trades. Do not take it. Let it ring. Let it be ringing in your head that if a trade cannot give you at least double of what you are risking, do not enter such trades. Just leave it till you are able to get the one that will give you a very good risk to reward ratio. A very good risk to reward ratio. So when we are talking about risk management, position sizing too matters a lot. Position sizing too matters a lot. And one of the best ways to reduce emotional play on you as a trader is to reduce your lot size. If for any reason you're feeling a kind of pressure emotional play on you, kindly reduce your lot size. Reduce your lot size. Maybe probably the lot size you are putting in your trade is too high. Is too much, as a more than what you can bear. By the time, if you use 0.02 on V75, a little drawdown, on a particular trade, you would have seen 200 plus, 300. That 0.02 is crazy. You would have seen 200 plus, 300. And maybe probably your total account is 500, and you are seeing minus 300 already. In fact, I don't need anybody to tell me that your whole emotion is attacked at that point in time, because all what you'll be thinking is, my account is about to grow wings and fly away. That's all what you're going to be thinking when you are having an account of 500 and you are seeing red of 300 plus. So if we have to reduce our lot size and go for more pips, if that's what will make you to be emotionally stable while trading, reduce your lot size. Even if you check your trading plan and the lot size is giving you, is not something that your emotion goes with, reduce it. You reduce it. Nobody is forcing you to use a particular lot size. If you have to drop it, even to the least lot size, drop it. That's how to be good emotionally when it comes to trading. That's how to be good emotionally when it comes to trading. And now, how to think like a professional traders. We have to start thinking like a professional traders. Someone that wants to last in this market. How to think like the professional traders. And how do we think like them? Number one, approach the market with a positive mindset every day. Approach this market with a positive mindset every day. It will keep your mind clear of negative thoughts. It will keep your mind clear of negative thoughts. When you approach the mind with a negative mindset, even if you are losing, you know that at the long run, with your consistency and all, this market will still pay you at the end of the day. But when you're already approaching the market with the kind of mindset that, this market, I will always lose. I will always lose. By that time, maybe you now enter the market, and as you would have it, the market is going against you. Before you know it, you are already telling yourself that, yes, I knew it. I knew that I'm not going to win this market. Before you know it, you close it, and the market will now eventually go your way. Let us be positive about this market. Even when you're having the winning streaks, when you're having the losing streaks, because there's something about Forex. You can have a winning streaks, and at the same time, you can have losing streaks. But when you stay positive that this market, you know what you are doing with your consistency, with your consistency, with your strategy, and all, you know that at the end of the day, it will give you edge over this market. Then you will be good. So our approach to the market matters a lot. It matters a lot. Always stay positive. Always stay positive in this market. Don't go with a predetermined mindset that you can never win a particular market. No, don't go with that mindset. It's not going to help us at all. It's not going to help us at all. And another way to approach this market is, we should put aside our ego. We should put aside our ego. Accept that you're going to encounter losses, wrong trades, winning streaks, losing streaks, but at the end of your risk management, your risk management will give you edge. Your risk management will always give you an edge over this market. And don't judge yourself with a 1 month result. Maybe you've made use of a strategy for just 1 month, and you're like, oh, this strategy is not delivering the result I want. I need to go for another strategy. It doesn't work that way. That's why you see all these big organizations, by the time they are presenting reports, they are presenting quarterly reports, they are presenting yearly reports, because they understand that in a month, maybe the first month you are not profitable, then the following month, maybe you are still not profitable, but the subsequent month, you can now be profitable. They understand that at the long run, things will actually, you need to subject a strategy over a period of time. That's why you see them dropping quarterly reports, yearly reports, not basing a judgment on you tested the strategy for 1 week and you've come into conclusion that it's not working. Like, okay, a lady approached me like some days ago. She was looking for a strategy to use on crash and boom. She 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 was she wanted to be she wanted to catch all the boom and the crashes in the market. I gave her the strategy. I even showed it to her how to use it. I told her to go and practice. She sent me a message today that she took a trade and the trade wasn't going away. And she started complaining that she does not even understand this thing. This thing is, she's even getting tired of this thing. Just imagine a single trade. If Forex is that simple, everybody would have been a millionaire by now. That you just test a strategy, you pick a buy, is buying, you pick a sell, is selling. You only took a single trade and you started complaining. You know, all this mindset, a professional doesn't think this way. Because you took the first 3 trades and you lose, doesn't mean that strategy is not working. Doesn't mean that strategy is not working. One of the guys I follow on YouTube is a veteran when it comes to Forex. He has been trading Forex. I think he said he has over 30 years of experience. That's Andrew Lockwood. I follow the guy, very closely. He dropped something that was last week. They back tested the very strategies he's using. They back tested 16 years of data. Just imagine 16 years of data. They back tested 16 years of data just to be just to test what's it called, the strategy, whether it's working. That's what that's the same point I'm trying to bring up. That you don't just test the strategy over a week, over a month, and conclude it's not working. Just imagine somebody testing 16 years of data on that strategy just to be sure of what they are using, that this thing is actually working. And they had to test it for 16 years of data, back testing data of 16 years. The way professional traders, the way they think is actually, totally different from the way a newbie thinks about this market. Just, when somebody that has over 30 years of experience is telling you they back tested the strategy over 16 years of data, you should know he's not mad. You should know that, not that maybe it doesn't have what to do with his time, but they actually know what they are doing. They want to establish a fact, and they are not testing it over a year, not over 2 years, not over 5 years, 16 years of data. So that's part of patience. When it comes to the Forex market, you have to exercise patience. Patience is key. Patience is king. If you are not getting anything tonight, please get this aspect. You have to be really patient about this market. That is one of the virtues you should possess as a professional trader. Patience, patience, patience. So I'll take another point now. Do not trade. How to think, that is still part of how to think as a professional trader. Do not trade for the sake of trading. Do not trade for the sake of trading. Until you see your setup come into place, guys, do not trade. You know what? Not trading at all is even part of risk management. If you don't see your setup in 3 days, hold your money. Let your money be swimming in your account. Don't donate it to this market. Not trading at all, as in staying out of the market. Staying out of the market is part of trade management. But when you know what I do, sometimes maybe probably if I've gotten my daily target, in order not to trade again that day, I will just close my laptop. I will drop my phones, my tab in front of my laptop. Then I will go to the sitting room and go and start watching TV. Because I know by the time I'm in front of that laptop, I'll be tempted to take another trade. I'll be looking for more setups. And that's where problem with setting. I will just close it and go and start watching TV. I will leave my laptop outrightly and go and start watching TV. So not trading at all is part of trade management as well. If you are not seeing your setup, even in a month, and you don't have to waste that money. Always think of protecting your capital first before thinking of potential profits. Keep that capital first. Safeguard that capital. Safeguard that capital. Then you start thinking of, okay, how much can I make with this capital? How much can I make with this capital? So sometimes doing nothing is the best trade you can ever make. If you are not seeing your setup, price has not come into your range, just fold your arms and start, just leave it to come to your range before you take the trade. It is not a must for you to jump on the market. And if you miss a market, let it go. Like my mentor, Stevenson Lindo, will tell you that you are already late to the party. When you miss a trade, it will tell you are already late to the party. Just wait for the next invitation to the next party. You don't chase a moving train. You don't chase a moving train. Whenever people ask me on the general channel that should we take can we still join? I tell them, wait for the next trade. You don't have to, there was a trade I dropped weekend and a lady missed it. And she was like, how can I join this trade? Somebody just replied, bring out your switch to 1 minute time frame. Bring out your Fibonacci. In fact, that was the first time I was hearing that kind of a thing. Fibonacci on the 1 minute time frame to come. In fact, I saw it. It was so funny to me, as if
I saw it. I did not just say anything.
As if I've not seen that kind of thing before.
Not to say anything. I was in church then. I was just seeing it like.
I just take to 1 minute time frame and break out your Fibonacci. Assuming I later told the lady that, see, don't play around with your money. Just if you miss the trade, just let it go and take the next trade. Because I could sense is that the lady too wanted to, change to 1 minute time frame and break out her Fibonacci.
All these
so funny. So funny. So please let us have a mindset that if you miss a trade, you are still going to get on another trade. It is not a must for you to always be trading like every now and then. It is not a must. It is not a must. When you put that pressure on yourself to always be in the market, that's when you start seeing setups that are not mature. That's when you start seeing setups that are still under formation. You start seeing so many things. Don't put this pressure on yourself. Be patient with this market. This market is not going anywhere. It's not like any networking system that you quickly want to, that pyramid system that before the pyramid will be saturated, you quickly want to make yours and cut away with your money. No, it's not another MMM, guys. It's not another MMM. Be patient. It's not crashing very soon.